If you want to make big money from the markets, consistent profits, the key thing that you need to learn on top of what you already know is how to take profits. There's a great saying, the trend is your friend, ride it until its end, until it reaches its bend. And we want to have a strategy that tells us what position is the trend in, and are we coming towards the end of a trend, and when we should tighten our stop losses to lock in some profits. We're going to dive into a cryptocurrency called reserve rights, but what we're going to cover applies to all markets and all time frames. So let's dive straight in. So this is a daily chart with reserve rights. And I got a few things on the chart, and I'm going to cover a bit of detail here. But if you want to learn how to take profits, one of the things you need to identify in advance is the trend. And sometimes you can just see it visually, like the trend, the recent price action is up. But you can use something called indicators, and there's thousands of them. But I like to use something called double time frame indicators or dual time frame indicators. What that means is we take two time frames, one higher degree and one lower degree. So I've taken a snapshot of the weekly indicator, which is in the top left-hand corner there, and the blue and the red line on the daily chart that you see live. So what this tells us, indicates, like it's in the name, right? Indication is a weekly indicator that tells us the blue line and the red line are pointing up. What this tells us is that we're probably going to see sideways to up for maybe 2 weeks, 2 weeks. So the macro trend is up, but the daily momentum, the immediate momentum is also pointing up. So now we have a trend indicator saying, all right, we should be looking for long positions and allowing the market to move to the upside. So that's the first thing. We're going to cover two more things. But by the way, if you want to know how to really lock in profits, read the market so you know when to buy, when to sell, I've actually just created my free crypto trading masterclass. The link is in the description. It will show you how to be 2 steps ahead of the market so you know when to buy, when to sell in a non-emotional, mechanical manner so you can treat trading and buying crypto like a business as opposed to a gambling, emotional roller coaster, which it is for many. So now let's just look at reserve rights, right? So we've got the momentum is pointing up. Now, I use something called Elliott wave theory, which just basically allows you to read the markets, the psychology of the markets, which is what drives price, is fear and greed. So what we can see here is that the price has gone up, and we have this nice movement to the upside, and markets, again, moving 5s and 3s. And what you want to keep in mind is something called wave 1s and 2s, and A's and B's. A's and B's are something called a correction, and 1 to 2 are more impulsive sequences. But often they look identical. So actually, it's good practice to not have to distinguish which is which. What you want to know is there's key Fibonacci ratios. Now, again, if you're absolutely brand new, have never heard of Fibonacci ratios, or you've only done basic Fibonacci retracements, I've done something here called Fibonacci extensions. What was discovered years ago, many, many years ago, many decades ago, even centuries ago, is that the markets, the wave structure, more often than not, if you can accurately identify the wave structure, the next price moves hits these Fibonacci ratios. So what I've drawn here is something called the 100% Fibonacci price extension and the 1.618. Why have I drawn these? Well, let's just be conservative first. Conservative will be an A, B, C. That's more of a corrective structure. And the next key price zone is this 100% for an A, B, C. Whereas if it was a 1, 2, 3, wave 3s tend to be very impulsive, very aggressive. So this is the likely price target for reserve rights, RSR token. And this is what you want to be doing when you're looking at your market. You want to have a mechanical, methodical way of analyzing the data. So let's just summarize here. We got the weekly momentum is pointing up, which is the higher degree time frame. We got the immediate time frame, which is the daily, also pointing up. So what does that tell us? Anticipate further upside movement. So if you're long on this, if you're long and you've got tokens or you're trading it and you got a stop loss, I would simply, when these price targets are approached, like this one over here, half of my position, I will trail my stop loss. I would put it on a swing low and maybe even on this swing low over here, and then trail half of my position on a 1 bar low. Every 1 bar, just trail it, and I want to get stopped out because the market could reverse and do this. And on my second half of my position, I want to give the market a lot more breathing room and let it express itself. Because if this is a 1, 2, 3, 4, 5, what would typically occur over the coming weeks, it will probably take a couple of weeks, 2 weeks. And again, we don't know at this stage, but it'll be something like a 1, 2, 3, 4, 5. And we want to give the market plenty of breathing space to express itself to potentially achieve this. And if the market starts to get close to this kind of range, there's some detailed analysis we can do. Then on the second position, to really then tighten the stop loss. It's called swing lows or 1 bar lows, and then eventually to get the market to stop you out before it does a bigger degree correction. So remember, the trend is your friend. Ride it until its end, until it reaches its bend. If you want to know how to do that in a mechanical, business-like manner, so you know when to buy, when to sell, but also when to stand aside when the market's not representing clear patterns, and you can just stand aside and look for a different investment opportunity, take my 4 Secrets Trading Masterclass. The link is in the description. It's free. It will just take your trading to the next level. So if you like today's video, like, subscribe, hit the bell notification. I appreciate you. I'm aiming to give you value so you can really make money from the markets. The markets are designed in a way which is a zero-sum game, and in fact, a minus-sum game. Minus-sum meaning there's a middle party, there's brokers, there's slippage, there's gas fees, depending on how you're buying your crypto or whatever it is that you're buying. And you're playing against other players, and 90% eventually tend to lose. So your job is to upskill yourself so you are on the winning side. Like a sport, you have to train so you can kind of get these principles in play. I'm going to finish with a quote from my book. It's chapter number 2. It's from Warren Buffett, this particular quote. It's rule number 1, never lose money. And rule number 2, never forget rule number 1. Now look, losing money is just a part of the game. It's just taking a loss. It was like, I remember reading one of these books, and it said, taking a loss in trading is the same as having a restaurant and having to buy food. Like to buy the food to serve your customers. Taking a loss in trading is just the cost of doing business. And that's just the name of the game. However, we want to stack the odds in our favor so we become the casino. So the probability of taking a loss is minimized. We can break even when we're wrong or lock in a small profit. And when we're right, we ride those trends and give the market lots of room. And that's where we make the majority of our money. So check out my masterclass. Let me know what you think, and I'll see you soon.